If you're looking for degenerate 1000x crypto gains on your DeFi yield farming and staking, you've come to the right place, my friends, because that's what we're going to talk about today, how you can earn 500 to 15 to 20,000% APY by farming on DeFi using tulip.garden. Let's get into it. Here we go. If you're looking for the next 100x crypto project to buy into, you have come to the right place. My name is Cameron Foose, and I have been a professional day trader for nearly 20 years. I deposited $20,000 into an account, and in just over a year, it's now worth nearly $2 million. On this channel, I'm going to present to you the best altcoins to buy, such as getting into Mana before it ripped 595%, getting into Dogecoin before it ran 15,000%. So if you want to hear about all the best trade opportunities first, hit that subscribe button, and more importantly, turn on the notifications bell so you can get these time-sensitive trade ideas immediately when my new videos go live. All right, what's up, guys? This is not financial advice, but it is something that I'm currently doing some degenerate yield farming on the Solana network using tulip.garden. Now, this is something I've recently been getting into as the market has been on a straight trajectory downward, and I have been making a lot of money short, also buying some dips and making a lot of money as well. Check out this screenshot of my recent dip buys. I don't know how much money that is, calculated up quite a bit. There's links below if you want to join the Wolfpack Telegram group, also go through my training courses, but there's also a lot safer money to be had in the DeFi space. Safer money, because there are some risks, and that's what we're going to talk about today. Is a little bit riskier strategy. If you haven't watched the Incur protocol video where you're earning 19.47% APY, there's going to be a link to that below, a much more stable version because you're staking stable coins. Today, we're going to talk about yield farming some degenerate coins that have extreme volatility, but extreme high APYs. And we're actually going to do it in a strategy that is delta neutral. We can also protect ourselves from it going up extreme or going down extreme because we're both long and short the position at the same time, but hopefully we're earning this 500 to 15,000% APY at the same time. So we can actually make a lot of money within the first 7 to 30 days, but also try to manage the risk along the way. So in order to make this work, guys, we're doing this on the Solana network. What you're going to need to do is get phantom.app wallet, add this to your Chrome, and this is Solana network. So what you're going to need to do is go to your centralized exchange, buy Solana, and then deposit Solana into this wallet. And once you're inside of your wallet, you're going to need to swap your Solana for the base currency of the instrument that you're trading. In this case, we're going to be using USDC. So you're going to want to go to swap Solana for USDC, and you're going to need to swap because that's basically the base currency that we're going to be using. You're going to want to head to tulip.garden. And under leverage farming here, this is going to be the list of all the highest APYs that are available. Right now, you can see stars.usdc. It's a 23,000% APY. Super degenerate shit right here, guys. Total value locked currently is 3.07. Cave is 14,000 APY. MBS. Gene, 3,200. Now, there are ways you can stake this and yield farm it, whatever you want to call it, okay? And we're actually 3x yield farming, okay? So we're borrowing money at the same time. We're not just using like a spot. This is like futures trading of DeFi yield farming. So we can take a look at stars, and you can go to radium.io and then go to trading. And this is actually going to pull up the charts of the potential ones. So we can look at stars. And you see this thing made that massive run up and then just totally ate shit. Okay. So if you started to yield farm this, even if you're using that 23,000% APY, basically you're exposed for this thing dropping, right? So you're just getting your ass kicked. While you might be earning yield on this, you're also exposed to the price of the token eating shit. You bought it at 3x leverage. So this is extremely dangerous to do this strategy. If you're thinking that something is about to go up and make a massive run, and there's 23,000% APY, you could make a lot of money, but you're exposed to the drop. So we're not going to look for coins that were exposed to drops. We're going to look for coins that we can be delta neutral on. We can borrow both USDC and the actual token, and we can split the amount of farm yield so that the point is no matter if it goes up or down, our yield is going to be the same based on the price action of the actual coin, but our APY, we're still earning APY. So we kind of want to find the most stable coins as possible. We don't want to see ones that are going to make massive moves to the upside or downside, because really what we're trying to focus on is earning that APY, not make money because we're hoping this thing goes to the moon. But we can actually gauge that a little bit, and we can actually shift our leverage in either direction if we think, okay, this looks like it has has a higher probability of dropping, let's go a little bit farther on the short leverage because we want to be exposed to that a little bit longer, or we think it's going to go up. We can shift a little bit more to the upside so we can still make a little bit more money if it goes up, or you can be 50-50 down the middle. So currently, the current open position that I have on Tulip is on basis USDC. Currently, the APY is 741%. When I open this, I think it was about 1,500%, so it's dropped a little bit. I believe as the total value locked goes in, it continues to drop, but right now I'm earning $251 per day in APY, right? That doesn't factor in the coin going up or down. But if you look at my equity value, you can see I've earned $1,698 in interest on my pool, my liquidity pool, and I've also earned $3,000 from it going up. It shows you exactly what you earned on APY and also what you've earned profit or loss based on the token going up or down, right? So that's why it's extremely dangerous if you don't do a delta neutral strategy. Say if you bought stars up here and you're like, oh, it's 23,000%. Doesn't matter if it goes down because I'm going to earn so much money. Wrong. If you look at this, you would be at a massive loss on your P&L for the position. But yeah, you would have some APY that you've been earning, but the loss would probably be much larger. So you'd actually probably end up at a loss. So what we need to do when we're looking at these positions on the leverage farming is you want to sort by APY. You also want to make sure there has, at least 2 to 5 million in TVL because you want there to be some liquidity. So we want to look at the ones that have dual currency where you can borrow both of them. Sometimes it pops up on MBS and Cave on these really high ones that you can do dual currency. And I've tried it and you'll see that it's actually not going to let you do it. So we'll give it a shot, but probably the most likely one that has the highest yield, that's probably the safest, is Gene at the moment, as well as you can also earn 436% on Atlas, Samo, and also Basis, which I'm currently in, is a current APY of 639%. I'm going to go ahead and actually close out for profits on this position. And here's what it's going to look like. Okay. So you can either convert everything to Basis. So your amount to trade is more than $50,000. Please partially close the position. So if you want to minimize trading, we will convert the minimum required amount of tokens into Basis to pay back the debt and return the remaining assets to you. This could potentially save on slippage and trading fees. Okay. So you will receive approximately 58,965 USDC and 24,500 USDC basis. You can see my current profit is about $1,700 in APY and $3,000 on the actual position. This is about a week, I believe, that I've had this open, and I've been earning, between $200 to $500 per day in APY based on the actual current APY, but the APY has been dropping every day as each day goes on. So I'm going to go ahead and close out this position and make my almost $5,000 in about a week on this off of a initial investment of, I believe, about 50 something thousand. So we'll do a close position. We're going to approve this. What's going to happen here is I'm going to have to go and swap this basis for USDC, most likely on Radium. So once this approves, transaction position closed successfully. So now you can see under my positions, I don't have any positions there. We'll go back into my Phantom wallet. We can see now there's $61,000 here, and I have 24,000 basis, $58,000 USDC. And so now we'll go to Radium. I'm going to swap my 24,000 basis back into USDC, because I don't want to be exposed to the price action of Basis. All right, guys, so now my Basis has been swapped for USDC. So now I am back all cash, not exposed to anything. We could look at Basis here on Radium Dex. You can see I got into this on this day. I got lucky that this bounced, but I was also thinking, okay, we just had this massive sell-off. Likely of it having another massive sell-off, probably not. So I'm not exposed to the downside. Maybe it bounced a little bit, but I did make a little bit of money on this bouncing, and then it's been stable for the last 3 days, which was very nice because I wasn't seeing that much exposure to huge up and down swings and being exposed to the price action. But I just closed it out for about $5,000, and that was in 1, 2, 3, 4, 5 days where I earned almost $2,000 just from the APY alone on about $50,000 position, right? And I also made $3,000 on the position. So let's take a look at a new position, potentially Gene here, which just had this massive drop and now a massive up, and now it's actually pretty stable. Now, here's the thing. So we want to find something stable, and right now it is, but it could really go either way. I'm also nervous of it potentially pulling back again and seeing a little bit of exposure to the downside. So maybe I would want to skew this a little bit more in favor of the short than the long, than being 100% neutral. So I'll show you how to do that on Tulip. So we can see the positions APY. You want to look for the ones that you can borrow both the coin and USDC. I've already tried to do both of these, Cave and MBS, with these super high yields. It just says there's an error. It doesn't work. I don't think you can do it on the ones that have these super high APYs. So Gene is probably the highest APY right now. That the chart looks okay. Let's actually take a look at Aleph, because we also want to look for something with a super stable chart. Super big swings up and down like this are a little scary scary, but this has a higher APY. Let's take a look at what this looks like. Aleph, 821. We'll do some Gene, okay? We're gonna open up a position on Gene. This is where it gets a little bit more serious in the education process of how this actually works in the delta neutral strategy. So what you wanna do is open up the simulator, and however much USDC you wanna actually put in this, I'm just gonna go ahead and go balls to the wall. And now you're gonna wanna shift the borrow asset meter here. And about 66% of the asset versus 33% of the stablecoin, USDC, which you're gonna be depositing, that puts you at about a delta neutral strategy. So if you look at the simulator here, you can see in 30 days, this is the meter here. If the price is the exact same, you're gonna earn an estimated profit of $10,000 or 17%. But that means you have to hold this thing for 30 days through thick and thin, basically gotta hodl it and hope that the price is about the same. But say, if price goes up, and you can see your equity right there, it says plus 19% as it slides up and down. You can see at some point that equity starts dropping because you also have a short position here that you're gonna be losing money because we are on a delta neutral strategy here when we have this ratio of 66 to 34. But you can see price action can rise all the way up according to this calculator. Price action can rise 89% in the next 30 days, and you're still gonna earn 12% total between the APY and the position gain. You're actually gonna be 30 days profit from holding 54,000, 30-day farm profit 7,000. But you also have a little bit of short position, so you're not constantly going up. That's why there's this also one here that's going down, because you also have a short position that eventually gets a little bit too scary. So, but in 30 days, this can rise 90%. You're still going to make 11% on the actual position in total. Obviously, there's the other factor like, well, the fucking coin went up 90%. I could have just bought it. Okay, this is delta neutral. So we also want to protect ourselves if it goes down to the downside, right? Because it could easily drop 30 to 50% as well in 30 days. So if it drops here, you can see it says where it says your equity right now at this point at about a price of 596 is where you're going to go negative on your position. So if the coin drops 44% in 30 days, you're actually going to be break even on your entire position. So this is where delta neutral comes in handy, right? Because the coin can drop 45%. You lose zero money, right? Because you're also short the position. Doesn't matter. You're also going to earn money on that APY, but the position loss from it dropping 45% is going to wipe out your APY profits as well. That's why you want to find something that's stable, because ideally you want the coin to be near the same price that you started. And this is on a 30-day calculator, right? So that means you would hold through it. It might drop 40% and then come back up 40%. So that's the risky part. Is let's take it down to 7 days. Gene only has to drop 14% in the next 7 days for you to be break even on your position. The shorter time frame, the easier you can be in a losing position, because you didn't give yourself 30 days to earn APY every day for 30 days. The risk gets higher as we hold for a shorter period of time. Or you can go to 90 days where your APY is going to earn you 59% over 93 days. But that means you have to hodl this thing over 93 days. And these freaking shit coins can be extremely risky as well. We have no idea what Jenna Pets is going to do over the next 90 days, right? So for me, I'm holding for, maybe 1 to 2 weeks max. I'm not trying to lose a bunch of money because I'm not hodling these things, and I'm not going to try to fucking watch as something drops 80 or 90%. So let's just take a look at the Gene position here on Tulip and see how we can actually protect ourselves to make a little money. If we look at the actual chart on TradingView, it's overbought on the chart. So which leads me to believe it's a higher probability that's going to actually see a pullback. So maybe I want to see a little bit more exposure on the short side so I can adjust my leverage here. This curve is a little bit higher on the short side. So let's go to a 30-day price estimate. I'm going to borrow more of the actual asset. You can see I want that curve, I want this yield curve to be higher, more in favor of price dropping, right? So now at this point, Gene can drop 54% in the next 30 days. I would lose no money. But if it stays the same over the next 30 days, I'm still going to earn 16% or 10 grand. Doing nothing, just sitting, earning yield, not that bad. But if it goes up 77% in the next 30 days, I'll also break even, right? Both scenarios are pretty unlikely, okay? It dropping 50%, possible, but a little bit unlikely. It going up 90%, a little bit unlikely, okay? That's why this is a little bit risky and why delta neutral protects you on both sides. I'm actually gonna do maybe a 30,000 position here. We'll give this a go. I'm skewed a little bit more in favor. I'll actually do 75% in favor of it, more likely to drop. So I'll still earn money, more in my favor if price drops. So as of right now, over the next 30 days on a $30,000 position, I'll earn $4,800, earning yield on a delta neutral strategy for Gene. I'm gonna click farm. Transaction has been sent. Your position has been opened. Now we go to my open positions. Now we can see I'm in Gene, current made 5 cents so far on the position. So now going back here to this actual simulator, guys, this is how you want to protect yourself from getting liquidated because you don't want to go into a losing position. So what you can do to actually monitor this, if you're not looking every day, is set alerts on the actual chart over here on Gene, right? Because right now on here, it has to go upwards of 72% for a current price, has to be at 1841 for me to be break even on this or lose money in 30 days. So what you can do is go here on TradingView to the chart, 1781. Now I can set an alert here, be like, okay, Cam, exit Gene, okay? Also an alert to the downside, which is I go into a zero loss position or break even position at a price of $4.90, which is all the way down here. Set an alert, right? So now I have alerts here for 30-day liquidation prices. Okay, so within 30 days, this can't drop below this level and it can't go above that level, or I'm going to break even on this position, right? So that's a lot of wiggle room when we look at the chart, right? The probability of it going up that much high, maybe a little bit low. Probability of going down this low for me to break even, it pretty low, right? So this gives you a shitload of up and down wiggle room to still earn money without being exposed to any profit or loss on this, or actually loss, but you also have to hold it for 30 days to earn that yield of 16%. So this is a way to earn money by yield farming and still being able to manage all the volatility, but still make money if things go up or down. This is a degenerate way of using DeFi yield farming. It's still extremely high risk. Again, because say if it drops 50% tomorrow, you're gonna lose a decent amount of cash on this position because you didn't give yourself any time to actually earn any APY on that position. So obviously there is a lot of risk involved in this strategy, but you're not going to be exposed to the actual, massive, just, 50% drop losing position. You're still going to be earning APY and you're also short on that position. So you're not losing 50%. You're going to lose a much smaller fraction of the 50% because you're delta neutral on the position. But that's how you use Tulip on the Solana network with the Phantom app and using a delta neutral strategy.